that should be regulated to say if you come from any other country, you can't enter the lowest level of business. But then as NAFCOC, we believe that if we go into those type of protecting our own locals, we will definitely be able to promote inclusion. We'll also be able to encourage our own small businesses to grow, and by growing, of course, it will increase our tax base. We will also be able to create the stability, because as you can see in various township, rural areas today, there are so many illegal businesses or business activities taking place. And if you go into it, you realize that the majority of those businesses are actually run by the foreign nationals, and we need to find a way to create a balance. And I want to say, in conclusion, Program Director, that our position as NAFCOC is very clear and is very straightforward. We are saying government must prioritize and invest and support the small, medium, micro enterprises to succeed. We are saying let there be simplification of the licensing. The timeline should actually be shortened and the cost to do business be affordable. That's the reason why we support the ministry and the department to have this bill promulgated as soon as possible so that we can begin to implement it. I've indicated earlier on that the regulations need to be implemented, and the ministry must find a way, or the department must find a way to engage with the municipalities so that capacity is built within those municipalities, and they should be able to implement the bill. But those implementations should actually be in consultation or in partnership with the organized businesses, because at the same time, businesses can begin to operate in an environment which is not very healthy. We have seen in the past a number of cases of people who were poisoned by some of the activities in the businesses. So we will then be able to take some kind of collective responsibility for our members to do the right things and not to go against the law. I think that's what we are saying, Program Director. So let us work together with all the municipalities, the various departments, and I must say that the state president has indicated or given us marching orders. So what should actually happen is that we will, as business, continue to lobby for more funding for the department, for more also authority, because the department needs to have its pulse on a number of development finance institutions so that our people can have access to finance as well, in as far as they should have access to the market. Thank you so much.
Thank you so much, President. I'm sure you're not lobbied by the minister to say that, but thank you for that. Our friend from Cape Town, I think our colleague from the informal sector was saying you don't know, each and every town has got a different bylaw. And as we're consulting people for business licensing, we were told that we are now attempting to usurp powers that municipalities must have. But I wanted to ask you on the issue of waiver. The business licensing bill suggests that certain businesses must have a waiver for licensing. Do you think the city of Cape Town would agree to that?
Well, maybe Chair, just two things. One is the issue that was raised by my colleague, I forgot the name, is it Melvin or somebody? I forgot the name. Actually, we are in agreement. The city is equally frustrated by the barriers it has, because that is a creation of the National Building Regulations, which is an instrument that is managed by DTIC. So it sets the standards for buildings, and it affects not just the city of Cape Town, it affects all municipalities. I think as part of a strategic advocacy program that we must maybe join hands with you, is to identify a few of these instruments that create that bottleneck, because I can tell you every municipality that is here is having the same issue, because there are certain zoning and fire bylaws and other issues that nobody wants to not comply with the national legislation in as far as that. Remember, when some of these regulations were set up, they were not done with the context of understanding informality. And the city actually took a decision to formulate its own bylaw, advocate but formulate a bylaw that then allows it to overcome these things and find a way of making sure that people find some way of title in situations like that. In terms of whether the city would make a waiver, you would know that I am not in a position to communicate that, because I'm not from that department. I drive on behalf of the city, I drive the entire program, report to the mayor and to the city manager and all EDs, and I coordinate the functions of all these regulatory bodies. So that is something that I would pursue, and I'm sure the city would look into considering that. I don't see a problem if it will help. I'm quite keen to further engage with my colleague and maybe the provincial government, because they are here, to see how might we sort of tackle these type of issues as well, because they need collective solutions as well. Thanks.
Thank you. Minister, before you arrived, the city of Cape Town were saying they have what they call stupid laws, and they're scrapping those stupid laws. So I think he says wavering will not be a stupid law. It's not a stupid law. Okay.
I'm not saying that.
As we conclude, MEC, yesterday there was suggestion that, notwithstanding property laws, but most of the malls that are in townships exclude local businesses. And there was a suggestion that there must be a quota in those malls for local businesses. Would you agree with that?
Thank you, Program Director. As I've earlier suggested, that we really need to have a framework that is standardized, that talks to different kinds of environments and conditions. Definitely we'll have to agree to that, because it will then start to enable emerging businesses to be developed. For instance, I think one of the biggest elements in the room is the financial regulatory framework. I think we're not being aggressive to ensure that the financial sector try to develop what we'll call a interest rate which will speak specifically to SMMEs, to ensure that as and when you ask for loans, there's a holiday of some sort for SMMEs, but there's also a regulation that try to ensure that you are dealing now with an SMME, not a well-established businesses. But this also has to start with the central bank. What is the role of the South African Revenue Bank in relation to the banks which will showcase that indeed, as Bank A, we are doing our best to ensure that we have reduced the interest rates to ensure that SMME are able to be developed. So definitely we'll have to do that. But the second part is this issue that have always been raised. And I'm not sure, because I think we are beginning to be kind against some nonsensical stuff that are taking place. There's a saying that we've got good policies, but we just lack implementation. How do you measure a policy? It's by implementation. So what makes us to conclude that a policy is good if it's not being implemented? Instead of being aggressive to say, let's implement policies that have been concluded so that we are able to measure whether they are good or not good. So before we can even say we've got good policies, they can't be good if they are not being implemented. The only time we can say they are good is when they are implemented. So definitely we'll have to put something on the test, showcase that we are doing something to support SMME, and try to have a framework that speaks to the localization, particularly to ensure that SMMEs are being supported. Because that's the only way, even the president agreed yesterday that the only way to ensure that we are going to tilt the unemployment and ensure that we also grow the economy that is inclusive is by ensuring that we support SMME. So definitely I will support that one. Thank you.
Thank you so much. Colleagues, we have questions there at Mentimeter. They were asking a number of questions which you participated on. I think if they can just put it up now. The first one was, in one word, what is the biggest regulatory barrier to doing business today? As you see there on the board, I think the main thing is compliance and licensing. And bylaws, finance, bureaucracy, and so on. So those are the main things. If you can go to the next one. Which regulatory area should be formed first to improve ease of doing business? So 21% of the people said it must be business licensing turnaround. 16% they said municipal bylaws. 1% is way leave access for ISPs, and 2% is business work. So I think as we conclude, we just want to, we're recently working with the Department of DTIC, had a 500 million program for spaza shops, and we had a very, very low uptake from spaza shops, and you run a spaza shops. What do you think was the problem?
Chair, I think the problem is the red tape. And the system need to be changed, the capture system. Because when they capture your application, it is only for formal settlements and not for informal settlements. And that is the time your application go into the bin as an informal settlement.
Thank you so much. Because you are the only rose among the thorns here, I'll give you the last bite.
If you can clarify.
I'm giving you the last bite to conclude.
My closing remarks, I feel so important. Thank you, Program Director. Yesterday, President Ramaphosa said something very fundamental about the session that we're having over these 2 days. One, actually a number of fundamental issues, but I just want to highlight one, being that as we come here, we're not coming to just identify that these are the challenges. We've gone past that stage. We have identified the challenges, and they have been reiterated in this room over the 2 days. And there was a fundamental question that says, are we then prepared, and how prepared are we to re-engineer the systems that have created these challenges that we have? And I think that is a very important aspect as we highlight these changes that we believe should be implemented in the next 18 months, to also bring that with a very concerted energy to ensure that we engineer those systems. We make our regulatory frameworks to be fit for purpose, rather than to say they are here, people must jump these hoops and loops, which hinder the success of businesses, which hinder the job creation initiatives, and exacerbate poverty in our country. Thank you.
Thank you so much. Ladies and gentlemen, can we give a good clap for our panel? Thank you so much.
Thank you so much to the panel, and thank you so much to the DDG for facilitating that so well and on time. Ladies and gentlemen, as I indicated earlier on, our program is tight today, so we are going to be moving pretty fast and swiftly to the next program. But there is, I understand when there is coffee at the back, I will alert you so that you can quickly dash and come back into the plenary session and have your coffee comfortably seated while you listen to those engagements. Allow me to, as of course the DDG has already done, to welcome the honorable ministers who have just joined us this morning. Of course, the ministers of small business development as well as cooperative governance and traditional affairs. Thank you so much, ministers, for your presence, as well as, of course, the honorable deputy ministers and the president of SALGA also here present this morning. Of course, an important note there that was made by Ms. Sibisi as she wrapped up that particular discussion, reminding us, of course, about what President Cyril Ramaphosa said yesterday. So how prepared are we then to re-engineer those current systems and ensure that we move away a little bit slightly from policy and existing structures that are there and start talking implementation, and how well do we implement that? And thank you so much to our delegates who are participating on that platform and asking those questions and responding to those questions. Please keep that coming. It allows then the panelists here to engage you on some of your discussion points. Ministers, another point that was made yesterday, and I promised the delegate that I will raise it today, was let us not forget the people in South Africa that are living with disabilities. So when you think about how South Africans are struggling from a small business perspective with existing structures, can we give and spare thought to those living with disabilities? What are we doing in that space, and how well are we doing that? I would like now to, without further ado, call on the next session. It's session 2, the Access Compact. So how DFIs open their doors to township and rural MSMEs. I think also an important one. In this particular session, it will be facilitated by Mr. Andrew Murray, Special Advisor to the Minister of Small Business Development. Mr. Murray, if I can ask you to please take your seat on the stage and facilitate this particular session for us. Now, during this session, the Honorable Deputy Minister of the Department of Trade and Industry and Competition, the DTIC, Mr. Zuko Godlimpi, will be giving a presentation. May I ask the Deputy Minister to also please take his position on the stage as he will be making that small presentation too during this time. I'd also like to call, of course, as you've been seeing since yesterday, we have been including entrepreneurial voices, important voices, I might add, given just the information firsthand that we have been receiving. May I then call Carol Pentela to please come in, and she is from the hospital at Ekaya at the Francis Bart district. That's, of course, in the Northern Cape. Please, can you come up, Carol Pantela, there for us, of course, also an MSME owner who has applied for DFI financing, I'm told, and has been declined at some point. So we want to know, of course, that first-hand experience. Mr. Richard Manzini, Chief Investment Officer at the Small Enterprise Development and Finance Agency. Please, can you also come up, Mr. Manzini, and take your place on the stage? I'd also like to call Ms. Siziwe Zulu, Business Development Officer of the National Empowerment Fund, the NEF, to please also take the position. And then we have Ms. Makgotso, Senior Manager, Stakeholder Relations and Parliamentary Services at the Banking Association of South Africa. I did not actually practice the surname, Ms. Makgotso, so you will forgive me. I do not want to get it wrong, but I'm sure throughout the course of today, I will get it right. Muilwa is what I can master at this point in time. Thank you so much, ma'am, for your time. Mr. Ndumiso Kubeka, CEO of the National Youth Development Agency, also joining us in this panel. Please, may you also take your seat. Of course, a robust engagement that I have no doubt we will be having, that will be ably facilitated then by Mr. Murray. As all panelists are aware, we have 45 minutes for this session. Thank you so much, sir.
Could I ask Don Michele from SEDFA to join us? Richard Manzini is not with us, so if Don, I believe you are somewhere in the audience, if you could come up and be part of the panel, please. Yeah. Okay, so greetings, everybody, ministers, all protocol observed. Look, this is a really important panel. I think we know, and it's come up in all of the inputs yesterday by the Honorable President, by Minister Small Business Development, Minister Kogta, the SALGA President, the issue of capital not flowing, firstly to rural municipalities, rural provinces, and even within metros to townships. So we have a situation where capital is flowing to certain parts of the country, and the net result of that is economic concentration. So you're getting the South African economy increasingly concentrated in fewer and fewer spatial nodes. Some of those are big cities, but you're seeing a lot of the poorer rural provinces regressing economically. And then within those particular is how do we get capital to flow to where it is most needed, where it will have most impact, where it can unlock potential. So that's at the more spatial level. And then you've got this issue of small business, cooperatives, startup entrepreneurs not able to access finance. And I know this figure always gets quoted. It's from an old World Bank study, the MSME credit gap of 350 billion, et cetera, But that credit gap is real. Speak to any entrepreneur, and we've got an entrepreneur up here. Accessing finance to start your business, to scale your business, is difficult. So we want to know in this summit, how do we resolve that? How do we find solutions? How do we come together and build what is being couched as the Access Compact? We're going to start off with Deputy Minister Gotlimpi, who's going to talk broadly, set the scene, talk more broadly about how we can mobilize development finance, institutional investment. You know, we've got the PIC, we've got the pension funds. So capital is out there. And then obviously we've got private capital. But seemingly that capital is not being directed to where it needs to go. So that's what we are going to try and solve for in this panel today. So Deputy Minister, over to you.
Thank you very much, Andrew, and good morning to all the panelists. The NYDA is here, good. Let me start just by painting a bit of the macro picture problem that we have, that Andrew started with. The first is the idea that SMME finance is the exclusive purview of DFIs. That's one of the major flaws of how we think about this problem in South Africa. And the reason is twofold. The first one is that if you think about South Africa's capital pool, the balance sheet of DFIs is very small. So it's very small compared to the need that exists on the ground. That's the first one. The second one is how DFIs themselves raise capital. So you basically have DFIs expected to raise capital from the commercial banking sector. What that does, it does a dual pricing problem. So the DFI must price its loans sufficiently to be able to repay its debt to where it borrowed and then also make up money. So that basically means the cost of capital for SMMEs is structurally more expensive than what everyone else has to get. So that's the first problem. The second problem is then the spatial mispricing thing, to explain what Andrew is talking about, the concentration of capital in urban centers and not flowing to townships. What is essentially not stated openly, but what is implied, is that by virtue of being located in a township, you are more riskier than the person who's in an urban center. And this is also the same for people buying cars. If you are a young man in South Africa between the ages of 18 and 35, you are unmarried, you are from a township, and you are trying to go and buy a car, what you are going to get as your interest is marginally higher than what a white counterpart would get and who doesn't have a township address. Because again, built into that is the idea that you are a risk purely because of where you were born. And the same thing happens when you are raising capital. Now the third issue is that part of what happens is when an SMME is trying to raise money, it's more the record of the entrepreneur, the person. So the credit profile of the entrepreneur is what is mostly considered as opposed to the credit profile of the business as a going concern. And that has to do with how credit information is being generated in South Africa. So you could have an SMME that has been trading for 10 years. So they should essentially have sales data already. But because of how the system generates information, that sales data of an SMME from a township or a village is not what is utilized to determine the credit worthiness of the business, but rather the credit worthiness of the person behind the business. And that leads to the constraint problem as well that we have. Now, the more complex one relates to institutional capital and pension funds. And I think it was the MEC from the Free State Kitso who was making this point at the end. He put it this way. He said there should be, I suppose, a preferential interest rate for SMMEs. You can get to that, but attack it from a different angle. And I heard that someone from Banking SA is here, so I'm going to charge at them a bit, not in a bad way, but to explain some of the problems with the banking sector. What you essentially have in South Africa is that the banking sector has turned itself into micro-lending institutions in a very fascinating way. So we all know that you are more likely to get a personal loan from a bank than you are likely to get a business loan. So the same person, you are asking for two different things. You will be more approved for a 200,000 rands loan to pay lobola. I've seen that as well. We have 200,000 rands for you to pay lobola, but we don't have 200,000 rands for you to build an SMME. Now, that's fundamentally where the macroprudential issue of the Reserve Bank has got to come in. And we saw this during the COVID-19 period when the Reserve Bank said there's 500 million rands for SMMEs. That money didn't move. It stayed with the banks because at a macroprudential level, the Reserve Bank has not structured conditionalities that compel banks to reserve a particular percentage of their books for SMMEs. And if you don't do that, there's no incentive on the part of banks to go an extra mile to understanding the SMME ecosystem and building mechanisms that enable them to move capital from their books to the SMMEs for this financing. Now, the one about pension funds is a bit tricky, and this is my parting shot. It's the same as saying, can SMMEs issue bonds and raise capital in the stock market? That needs a particular sophistication on how we train them to think about these things. So you could have an SMME sitting, okay, I'm from Pizana in the Eastern Cape, so let me use my town. If there's an SMME that says they want to invest in, say, in solar panels or in the grid, it should be possible for them to design a low-priced bond that they could issue to back that up in order to raise enough capital without walking into a bank. And that is how you can get institutional capital to flow. But that could also be done by especially secondary cities and metros. Are there local economic development directorates in a position to help SMMEs to think about the design of commercial bonds that could be issued in order to raise institutional capital from the stock market for that purpose. So that's a bit of a different angle, but it's an important one, because it would be more the bond and how it is structured that gives credibility to that initiative as opposed to the person sitting behind the SMME themselves. I still think we're a long way from that position in South Africa, because even the culture of how SMMEs think about the capital markets, it would still need to be moved up a little. But I think the president was correct, and I want to echo his views that if we don't solve for the credit gap in the SMME market, we are not going to industrialize South Africa at the rate at which we want. A lot of the established private firms have no interest in building businesses in rural towns. So provinces such as the Eastern Cape, KwaZulu-Natal, Limpopo, we have a Northern Cape problem now, even though they have a mining province, capital is not flowing that side as much as we want it. We will always be starved of industrial capital because, as I was saying, because of the spatial mispricing problem, we are viewed to be risky by default. Not so much because our SMMEs are not going concerns on their own, but because of location, they are immediately deemed as unworthy of being financed. And the fact that the entrepreneurs cannot personally raise collateral, it means even if their SMMEs are credible going concerns with traceable sales data that could be used as lending information, it still means that they will not have access to the capital that they need. So that's to the extent to which. Now, the main problem for DFIs is that, unfortunately, they have also internalized the logic of commercial banks in how they price capital. I did say that they have the problem of having to contend with the issue that they raise money, that they also have to repay to banks. But how they do risk assessment sometimes, it also sounds as though you are still sitting in front of a commercial bank, even when you're sitting in front of a DFI. We are doing our best to move, especially the ITC and the NEF, to think differently about how they interact with the SMME sector and provide capital. But again, the pool that they're getting money out of is much more limited compared to the South African capital pool at large, which includes your commercial banks, your pension funds, and other institutional investors. So thank you, Andrew.
Thanks very much, DM, for that fantastic overview, I think, of all the different funding instruments. And I suppose the challenges, it's not as simple, I think, if I'm interpreting you, just to wave a magic wand and think capital will flow. Each institution has got its own set of rules that it has to abide by. Many of those rules are put in place by us as government, so we also have to be thinking at the policy level. I think you were mentioning the Prudential Authority and the role that the PA plays. But definitely those individual institutions, and we're going to hear from a couple of the individual DFIs here today. But before we do that, and I think it's in keeping with the general kind of theme, the general way that this summit has been facilitated, we want to hear from the entrepreneur. So if I can go over to Carl and just get a sense from you in terms of your application that you've made for development finance, for financial support, for credit, the road you've walked, the difficulties you've faced. And, from your perspective, is there a solution?
Thank you very much, Program Director, and the ministers that's present here. I don't know how do I speak after the Deputy Minister that I've already said everything. But thank you very much, and thank you for the opportunity, because I think I'm not special to sit here. There is a lot of other people that went through the same frustrations as myself that are not here. So I don't want to make it about myself, but rather about the industry and the people like me that's out there, that's not here today. I'm not a township entrepreneur. I'm an entrepreneur that have decided to practice in the township. I choose my location. I've decided to go there to make an impact in my own community and to invest there. And I would like to be treated as such, but unfortunately, it is not the case. As the Deputy Minister have said, by virtue of that location, you become a risk, or you are seen as a risk compared to somebody that's doing business in the suburbs. My journey to where I'm sitting today took me, and just maybe a bit of introduction. I'm the founder and CEO of Hospital at Ekaya, that is situated in Kimberley, Galeshewe, which is one of the oldest townships in the country. And it took me from the day that I decided to do a hospital until the day I opened my doors, 11 years. A delay that's caused, and I can't leave this one out, is the municipalities as well. It took 2.5 years to do a rezoning. And that is the frustrations that we're sitting with when you want to do business in townships. I have seen businesses going up in town or in the urban areas very quickly, and it's just different when you go to the township. But nevertheless, I'm here today and the business is open. It is not what we have planned to open. The initial plan was to open a 70-bed hospital with 4 theaters, which you had to do a feasibility study, go through the department. They got their own need analysis. They have confirmed it. They have issued the license. And this is important to remember, because when I'm going to talk about the DFIs, it will become important to remember what I just said now, that the department also go through their own need analysis when they issue the license. Nevertheless, a number of things happen, and eventually you don't get what you want. We all want to drive Porsches and big cars, and BMWs, I don't know the name of the cars, but, and then you end up with a Golf. So I've ended up with a Golf, and my Golf got 24 beds, including casualty, psychiatric admissions, and medical admissions. It's an operating business. It employs about 50 people at the moment as we speak, and we are now 15 months old. When we were 7 months old, we approached SETFA for financing, to finance us. That process took 7 months. So 7 months of intense engagement, where you don't get involved with other people to finance your business, because you're dealing with an institution that is giving you hope that you will get the finance, or the possibility is there that you can get the finance. And everything looks well. And then comes to the day of, you have, the finalization of the application, or the financing. And it gets declined. Now, yes, you are a risk, or whatever risk have been identified, it's fine. But it should not be that you have spent so much time and effort and resources on doing the application, and after a period of 7 months, you then get told, sorry, we can't finance you based on your feasibility study. Now, I might not be the cleverest person in the room, but if the baby is born, if there's a baby already, you don't go back to the doctor and do a pregnancy test. you decide on how are we going to raise this baby. You think about the baby's future. So I think there's a misunderstanding or a mismatch sometimes when we're dealing with these issues. And I'm not the only one. There's, as I said, there's a number of other people that have been in similar situations. We expect that DFIs will be a bit better than commercial banks. They will look at our applications, especially because where we are our businesses are located. We expect them to have a bit of more leniency. We don't want them to throw their money into something that's not going to survive or a risk. But yes, they should go there where the commercial banks don't want to go. And they should step up. Because I think there's so much opportunity, but it's not utilized. We are not being seen, or we are not taken serious for where our businesses are located. And that is sad. Because if a business like mine have survived for 7 months, paying almost 500,000 rand a month salaries, and you come and tell me about a feasibility study that I have done 5 years ago, and say, based on this feasibility study, I don't think, the feasibility study is old, and I don't think it's backed by financial projections and blah, blah, blah. That thing is old. We have to move on. So we have to be sensitive to these things, not in an irresponsible way. But step up, get to the party, and take us through these places so that we can take our businesses to the next level. As I said, I don't want to make it personal, but if a business can employ 50 people over a period of seven months, and you want to take it back to a feasibility study, then I think we missed the plot. And this is not the only one.
Yeah.
There is many others.
Yeah. No, thanks for that, Carl. I think you really speaking from the heart. And I think to municipalities out there, 2.5 years for approvals. I mean, you're not going to get investors. It's amazing. Your resilience is, I think we should give you a hand for your resilience. Just sticking with your program, getting your end goal achieved. So big heads up. But if we could go to the two DFIs, we've got CETFA and we've got NEF. So we're hearing about very lengthy, drawn-out application processes. We're hearing about applications being turned back after many months and then going back to square one, I think the pregnancy test, as it were. So what are you doing as DFIs, if we can say, before we get into issues around cost of capital and how you syndicate capital, because I think for me that's a big one, and how you de-risk, which we also want to get into. But just to answer Carl's, or address Carl's dilemma, just in terms of application processes, how do we speed up application processes, improve client interface? When somebody applies, they're getting consistent feedback all the time. They know where their application is at, and they're able to track that application. And even though, and we'll hear from the banking sector, and we know the banking sector is extremely risk averse and doesn't give out money easy, especially to startups and MSMEs. The one thing you do get from commercial banks is feedback. So what is it, why are DFIs not giving that kind of instant feedback back to applicants, and how do we speed up application processes? If we can start, Siziwe, with you.
Thank you so much, Andrew, and good morning. I stand on the protocol already observed. I think one thing, as I've been listening since yesterday, it is not that people do not believe that the capital exists, especially when it comes to us as DFIs, but is that they are doubting that they'll even get access to that capital. And I think on some of the points raised by the DM on how the capital is available, how much of it is available, and when we look at the landscape of South Africa and how many people actually need the capital, that puts a lot of pressure on the DFIs. We've got a lot of people looking for affordable capital, for capital that is blended, and even others can afford debt, but they have to get grant. But the amount of grant available to the market is not equivalent to the demand that is out there. But I mean, that doesn't stop us for those whom are able to get finance or get responses, but it takes about 7 months. I think that's something that as DFIs, we definitely need to start considering and changing. But one of the things that I think we are committing to, and the DM spoke about the IDC and the NEF looking at different ways, is that through capabilities of our systems, we need to start looking at how fast at least could we automate. And I guess this is across all government institutions and DFIs particularly, to say that we need to start looking at ways of how we can then fast track our processes, how we can then automate what needs to be automated, because if the scale is at the level, but the resources at the back end are not meeting that, then we should be able to look at that. But then again, as much as I'm speaking about automation, if we speak of rural and township, there is a lot of limitations when it comes to digital literacy. So we'll have a new problem as we do that. So even as we look at such solutions, I think we should look at them parallel, where the DFIs and the government looks at ways to fast track the process, but also equally, we look at social facilitation of then how do we equip everyone on digital literacy.
Thanks for that. Don?
Thank you. Thank you, Chair. Xolani Meva from SETFA. I'll also stand on the protocol that's been observed. Chair, I think it's been laid out quite well by the DM and by my colleague. And I'm noticing, obviously, the responses from the audience in terms of the challenge. One of them is that the application processes are complex, and the periods you wait, and the excessive documentation requirements. I think the programs we have vary quite a lot inside one organization. So perhaps they do need to be dissected, because we may have programs in one entity that are just grant programs that are for microfinance, that are slightly higher in terms of blending. There's an element of grant, there's an element of loan. The more the element of loan increases, the more risk assessment has to be done, because the applicant has got a responsibility to pay back that capital. And others then run into tens of millions, if not hundreds. So the degree then of due diligence and risk assessment that must be done varies. And I must say, as DFIs, we try and be as developmental as possible. You know, it's very easy to think just on risk, but we try, and part of that trying is to simplify the process. I think it must be communicated that not all programs go through the same manner of approval. Smaller grant programs, etc., we have done what's necessary to simplify them, and therefore they make for easier application process or simpler application processes. The complexity concept varies and may be subjective as you go up the application line. And other documentation now requirements, they also differ. Others are financial requirements, others are just simply law. You must comply with it, it's FICA, right? If I must have this and this and this and this for you, you are not necessarily even dealing with DFI requirements yet. You are simply complying with the law. Others are bylaws. The fact that you must have a zoning, there's nothing we can do about it. It really depends on how quickly it will take you to get a zoning, you know. So there are all of those, but I think what will help us as we try to assist as many DFIs as possible is the collaboration from various parties. We do our part to process the applications as quickly as possible. We simplify our applications to the bare minimum, but would expect the external and the partners to do their part in terms of turning around the turnaround times. I think part of what was done with CEDFA was simply the measure of the two entities. We are 18 months now into the measure, but we are starting to reap the benefits of entrepreneurs not having to go to CEDA, go to CFA and back to CEDA. All the assistance is in one entity now. And when people are not clear or they're saying the application process is complex, it gets explained in the same organization that you will have to do this, and then it's agreed, and then they go and do it, and then that is starting to kick out the shortened turnaround times that we seek to achieve. Of course, somebody mentioned the story of digitization. We are also going to be relying a lot on that digitization, AI capabilities that now are being developed into our processes. Obviously, we have to have the entity and then enhance the technological efficiencies and advancements in the processing of our applications. We're starting to see the real benefits, Chair, for an 18-month-old meshed entity. Thank you.
Thanks for that, Don. And I think, you're touching on some key points there, and I think it came strong from the DM's input as well, that DFIs need to manage risk. And one of the ways of, let's say, de-risking your lending is also through improving the quality of the applications themselves. So I know with CEDFA, for example, Siziwe, there is the emphasis on pre-investment support. So actually supporting entrepreneurs, with their business development, their project applications, their investment case, if you like. So the applications that actually come to CEDFA now are a huge improvement of the applications that were coming to CEDFA. It will allow for a quicker turnaround time in terms of processing those applications. And you can obviously target that. You can have more pre-investment support for township entrepreneurs, or for rural entrepreneurs, or for entrepreneurs, MSMEs and co-ops putting in applications from underserved provinces. I think the DM was talking Northern Cape, et cetera, et cetera. So you can direct your pre-investment support to develop the investment pipeline that comes ultimately to the DFIs. And I think that's something for me where DFIs need to collaborate more around. At the moment, DFIs are doing their own thing there, and some of them are not doing it very well, to be blunt, I think. So my question as well then, and DM, I think we will get to this later, is if that's for entrepreneurs, is there also the need for, from a municipal financing perspective, and here we're talking about financing for infrastructure and the like, for municipalities to be supported with their investment preparation? So I worked, in one of my hats I used to work, I worked for the GTAC in the BFI process, and that was with Development Bank and National Treasury. And that's great. You do a lot of support to metros to get them investment ready for big infrastructure investments. That's R1 billion plus. But there's no equivalent facility for smaller municipalities. So if you want to go and put township business infrastructure in place, you want to develop a high street and township precinct, there's very little grant funding coming to municipalities, Minister, to get those municipalities investment ready. And then they can go to institutional investors, they can go to Development Bank, they can go to DFIs, they can develop an investment bond if that's what it is, But they need that support to get them from here to there. So I think for me it's a big gap, the pre-investment readiness. And we need to be, from the side of government and DFIs and National Treasury, and we were speaking with DM Masonda's team yesterday, we need to be investing in that. And for me, that's an outcome we'd want to see out of this LED conference, this LED summit. But let me turn to BASA. Makotso, there's been a lot said about the role of banks, and that banks are underserving MSMEs in general, but they are underserving township and rural entrepreneurs especially, and young people, and I think we'll get to the youth question just now. But just in your opinion, what's the solution there? I know we talk a lot about de-risking, credit guarantees and the like, but from the banking sector and from the established banks, what are the banks doing to improve access, to de-risk, and to actually service those MSMEs? I think somebody said, DM said, if we don't service, the president was saying yesterday, if we don't service those MSMEs, we're not going to hit the 3% growth target. And we need banks. DFIs have got only so much capital. Most of the capital is sitting in the private sector. How do we get that private capital to MSMEs?
Thank you very much for the invitation, and I think that's a pertinent question, and I think the DM has alluded to some of the constraints in the ecosystem in what he said before. But before we just get to that, I think in an environment where 90% or close on 90% of business is SME, the market opportunity is obvious. It's very obvious. And where we're sitting as banks, we acknowledge it. In fact, we see it as a major growth area, whether you're thinking from an investment perspective, a commercial perspective, or even from a social contribution perspective. So that is a very important focus for us. What is also exciting about what is currently happening is the ecosystem that the DM is talking about and improvements that need to happen around that ecosystem. There's a lot of exciting developments, I think, that are happening there. The DTI has been really, really hands-on looking at what the legislation is doing in terms of constraints and how we loosen those constraints to enable a lot more lending. So if you're going to get to lending, you have to get through credit assessment, right? And if the regulations stipulate and tell you exactly how to assess credit, it makes it very difficult for you as a commercial bank or a licensed bank, let's say, to go outside of those parameters. And the exciting part is that we've been working very closely in the last year, 2 years with the DTI to look at case studies beyond South Africa, alternative credit assessment models, the ability to look at movable assets as collateral. These are things that are not there that will go a long way to assisting the ecosystem to lend more. And when we talk about the ecosystem, we're also not talking about just banks, we're talking about other financing institutions in the private sector, because we're not the only ones. And that becomes very important because when you go to a smaller financing institution and they see risk, the likelihood is that they will attach a premium on that risk to mitigate it, right? Vis-a-vis if you go to a bigger one who can absorb a bit more of risk. So we need to somewhat neutralize that. The other aspect that we have been driving as a sector and that I think is going to come to the fore very soon is the definition of an SME. It is very sporadic amongst us as banks, but also amongst the regulatory and the government ecosystem. So I always like to paint a picture. Imagine a scenario where we have a single definition, that SARS has the same definition, that the BEE commission and the legislation has the same commission. And now you've got an SME that has 10 Rand from a bank or from a DFI, but that 10 Rand goes a lot farther because by virtue of being in that category of an SME, they get a rebate, a tax rebate, let's say, from SARS, but also they get certain credits from a BEE perspective. That becomes a lot more interesting and exciting to look at. But I think in that utopian ecosystem, what we're going to start seeing, when it comes to the fore, we're going to actually start seeing a reduction in personal loans. So the DM talked about the ease at which it is to get a personal loan vis-a-vis a business loan. And some of our research is actually showing that it's increasing because a sole proprietor, a plumber somewhere, doesn't have the data sets that enable us to do a proper credit assessment and give him a business loan. So in order for him to go and do business, what does he do? He goes and gets a personal loan so that he can get up and going. And that's part of the reason behind the increase in personal loans. And so the consequence of a utopian ecosystem that we are working on together with government is that we expect to see that reducing and then an increase coming in on the side of the business loans. When we talk about rural environments, a lot of them, if not all of them, are mostly agriculturally based, right? And so there you're talking about the agro-financing side of things. And when you start talking about small businesses, again, the credit risk component comes in. Government has made declarations around blended financing, which we have received positively. We're very excited about that. But that needs to be implemented now to the full. The land bank, it was coming via the land bank, so the land bank needs to now go the full mile in terms of those grants and the agreements that need to be in place. So the initiatives, I think, are there. And the case studies, I mean, we often say, let's look at East Africa, for example, and how they have dealt with the alternative credit assessment model. And if elements of that can be brought into South Africa, I think we will see an uptick in financing, not just from the banks, but also from other SME financing institutions.
Great, thanks very much, Makotso. I think we are getting quite low on time, so Ndumiso, if I can turn to you. Youth is, rural, township are underserved, but within rural and township, youth are the underserved constituency within those sectors. How do we address that? Some of your thoughts, you with the NYDA, maybe share some of your thoughts on how private sector DFIs could come to the party, work with you as the NYDA, channel more credit and financing to youth entrepreneurs.
No, thank you very much, Chairperson of the session. I think the colleagues in the panel have actually highlighted a lot of the systematic barriers that from an NYDA perspective, given that our positioning in the development finance landscape is more on the grant basis. And so it's more of a de-risking and sort of a pipeline feeder to an entrepreneurial ecosystem in South Africa. I think what is quite notable, perhaps, to elevate as part of the Access Compact for MSMEs is, one, when we look at it even through the perspectives of young entrepreneurs with disabilities, we have found that certainly more support needs to be provided to young entrepreneurs with disabilities, even just from our processes, the documentation, is there reasonable accommodation there? And of course it means as an institution there's an extra level of investment that needs to be made to provide that kind of support and to increase the prospects of young entrepreneurs with disabilities as well from a financing point of view. So I think that's one point in terms of increasing access. The second one perhaps would be around an acknowledgement of the systematic risk that, of course, in trying to increase access, that we need to, both at a policy level but also at a programming level, need to address. One is, of course, the acknowledgement of the localized industrial patterns that you've highlighted around township and rural economies. And I think the DM quite articulated the question of information asymmetries that exist in the collection of credit data. In our instance, we don't necessarily collect credit data. It's really on the prospects of success of a particular venture. And so I would wonder that in an informal context, in a developing economy context, whether the type of data that is collected for credit purposes or grant purposes is fit for access purposes in the markets that we're trying to address. I think that's a second part in an attempt to address that specific systematic risk. Chair, you would have highlighted the question, of course, of cost of capital. I wonder to what extent in South Africa, and of course as a developing economy, when we look at the source of funding for development finance institutions, if the source of funding is similar to that of commercial banks in terms of debt capital markets, it would be unfair to expect DFIs to have, significantly lower rates of refinancing. So I think there's a question there, perhaps, that is worth talking about, and seeing whether or not is it also linked to both our economic strategy as a country and also, our industrial development strategy, and how all of that is linked together. I think the previous panel may have highlighted some opportunities that may exist around how, of course, monetary policy also plays a role in that particular ecosystem, so that it's harmonized and it's coordinated and it's not isolated in terms of our different efforts in addressing this access question. And then maybe finally, Chair, I think perhaps another lens is to certainly look at the access question for SMMEs and the financing of SMMEs, not just through access patterns, but through access and success patterns. And I would want to elevate that because so that we are also able to contextualize our solutioning for the access question. So the moment we're able to have a determination that young entrepreneurs are able to have greater, prospects for success through these types of reducing of the systematic sort of risks that we're facing, then I think those are some of the avenues or pathways that, created the better prospects for success for young entrepreneurs.
Great, thanks very much, Ndumisa. Really well put, brilliant. Look, we have run out of time. I'm going to give each of you 1 minute. Concluding thoughts, but more solution, the one thing you would like to see change, starting with DM.
I think the starting point must be, at least to local government authorities, we must take seriously this concern about the turnaround times on approvals. And this is a point that keeps coming to us as DTIC as well. If you are meeting investors, they usually complain about, we've applied for a permit from a municipality, we wanted to do this, that, and the other, but we've not heard from the municipality in months or in years, and I think that's the point that was being made here. So our LEDs in local government and how they interface with the approval process, we need to improve that, that's one. The second one, I'm happy that Sisbongi, at least PASA is accepting this thing. So let me give you a simple example. Most of us, we pay our plumbers and our housemaids and so on using e-wallet, right? So you already have a mechanism of a lot of financial data that these private proprietors have. If we can find a creative way to tap into that data, it can make the business approval system much better, because yes, they might not have a lot of money on their bank accounts, but if you track how much money comes into their cell phone numbers per annum through the e-wallet and cash send and you could almost be in a position to compute their credit worthiness just at the back of that. And I think those are some of the innovations that we need to think about. Ndumiso makes an important point that I suspect, Minister, we have to take seriously. And the point says, if our DFIs are going to be borrowing money in the capital markets at that prevailing interest rate, they are going to transmit that money to SMMEs at a higher notch. What do we do as regulators about that? I've already made a point about what to say to prudential authorities. Our DFIs have not been capitalized by the Reserve Bank in a very long time. So that's potentially a question that we could raise, as opposed to that free-floating 500 million rands that we couldn't agree on how to place on bank balance sheets. We potentially could have moved it to DFIs to achieve the same outcome that we wanted to. So there is a case to be made about recapitalization in a creative way in order to provide an expanded and lower rate of capital to DFIs to push out into that side. So maybe that's for you and I, Minister, to think about how do we have a discussion with the National Treasury and the Reserve Bank on exactly to learning from the COVID experience. What do we do? Because part of the problem was banks asked a simple question, and it was almost a valid question. who puts this thing on their book and at what risk? Who guarantees it at the back? And we couldn't agree on how that money was going to move, and it didn't move. So we need to get to that point. And maybe then our local government authorities must also assist our informal traders, not to rely too much on cash only, maybe some speed point of sorts that could actually build a credit score on its own, because if people are paying using that, it's easy to compute the information there as opposed to taking cash all the time. I'm not sure what the viability of that would be, but I think our local government authorities need to start thinking much about moving that direction. Thank you.
I thank you. I think from my side is the turnaround times is a big issue, because even on the soft assistance, the marketing materials and that type of thing that is approved from the DFIs is also taking very long. So just to streamline that, streamline those processes and get those things out as soon as possible. Because as time lapses, you're losing the opportunity and the impact of the marketing. So I think there's an opportunity there to streamline that process of dispersing the monies that have been approved. I think the funds is available. I want to differ with my panel members, because if I look at I've had a brief look at some of the financials, and I think, Minister, there's a lot of money that's lying around there that can be distributed. There should not be money go back to the coffers of government. That money must be spent. It must get out there so that we can use that money and we can create jobs and we can improve the environment where we operate and where we live.
Thanks. Can I
I think the last...
one point each? We're out of time.
Oh, okay. That's fine. Thank you.
Thank you so much. So I think even with everything we've said, also to the entrepreneurs in the room, one thing that makes it also easy for the next SMME to grow is that to also allow, so I think even from yesterday we heard those that want secondary funding, those that need, but they go to the same DFI. So both government and the entrepreneurs, we should get into a phase where if someone has then applied through SEDFA for a 10,000 Rand loan or 1 million Rand loan, once we see that you as a business, you should as self find yourself being viable, make sure you utilize that to the best of ability, graduate to the NEF, graduate to the IDC, because then they keep tapping into the same pool, which prevents the next entrepreneur from tapping into that, and the market is growing. And then I also think from an LED municipality, we need to find a way, I think DM and Minister, beyond today, these synergies, I think we speak about everything we've spoken about. If we're not going to implement in terms of how do the DFIs or the financial institution start working in sync with municipalities, we're going to have similar conversations over and over and over again. So such a work stream or task team needs to exist to allow for smooth processing.
Thanks very much, Mokotso.
Thank you. I think the DM has really covered us a lot in his comments. From a solution perspective, I just want to also highlight one of the things we do as BASA is we aggregate opportunities that we feel are going to be beneficial to the banks. And one of those that we recently launched in the last year and a half is what was called the Afawa Finance Series for women-owned businesses, small businesses. And that is a 75% credit access guarantee that is backed by the World Bank and AFDB and is linking into our financial institutions. I know the last time I checked, about 4 of the major banks were already looking at how to sign agreements with that. The next best credit guarantee of that sort is government, which is at 80%. So this is a really, really good credit guarantee risk tool designed to lower the risk for SMEs, in this case in particular women-owned SMEs. So there's a lot that's already going on. So imagine what the DM has already referenced in terms of alternative credit risk guarantees, et cetera, combining it with these kinds of solutions, combining it with grant finance, it becomes a really, really viable, colorful environment for business, for small business in particular, to thrive. Thank you.
Thanks very much. Dumiso?
Thank you, Chair. I think from, again, from a solutioning point of view, the point that you made around investment readiness, I think is a significant opportunity. If the African Development Bank itself says that on the African continent, only 10% of projects reach financial close, and it's primarily because of the lack of proper project preparation or investment readiness. So, and those are on commercial transactions. We can just imagine on the development side, the level of project preparation, investment readiness, investments that need to be made there. So I think perhaps as part of the access question, in terms of how we allocate resources in preparing projects on the development finance side, it might be a bias that we might need to have. Thanks, Chair.
Perfect, thanks. Don?
Thank you, Chair. I think the last thought is just that I think, as indicated, we've done a lot in terms of reconfiguring ourselves to be ready to deploy capital as speedily as possible. But we do have limited capital. As a result, I think if we focused on increasing collaboration with other stakeholders, it can make us move faster in deploying the capital and reach more. For instance, while we've got a bias towards rural areas and townships, sometimes the applicants who approach us don't even
in silos, work together, pool your funds, use one in silos, work together, pool your funds, use one credit rating system, don't run your own different credit rating systems. So we could really collaborate much more. And I think the private sector, there's a lot happening. But what I think we've all agreed on, we're not taking that down to the ground. So that's what we have to do. We have to work with SALGO, we have to work with COGTA, we have to work with municipalities. Find out what it is on the ground, your needs, make sure technical assistance comes in terms of project preparation, investment readiness, and let's get resources flowing to where the capital needs to go, townships, rural areas, municipalities for basic infrastructure. Thanks very much. We've heard from the panel. Let's hear from you. I'm not opening up the mic, but just on the Mentimeter. So first one, what makes DFI financing? An announcement first.
Sorry, Andrew, if I may. Before we get into the Mentimeter, which Andrew's going to run through very, very quickly, I want to also just remind you that this is a working tea break, if you will. So if you do want to grab coffee very quickly, very quietly, because we are continuing with the work at hand, and before I call the next panel, you may do so and quickly take your seats. Please, thank you so much, delegates. Andrew, over to you.
Thanks very much, Program Director. So just in terms of the first question, what makes DFI financing hardest to access, township and rural? Collateral. So I think those issues, alternative collateral registry, rethinking collateral, but all of the constraints, financial statement, lack of knowledge, the information, the symmetries that we've spoken about, compliance, red tape. I think the President yesterday really hammered that hard. Cut the red tape, make it easy to do business. Next. Which barriers most prevent MSMEs from accessing DFI financing? Again, they're complex application processes. That's a strong message you as the audience are giving to the DFIs here. Simplify your application processes. Make it easy for us to put in applications. Do they really have to be so damn difficult to apply, where it takes months to get an application ready for financing? And then all the documentation that's required, often that is because of the Prudential Authority and all the rules we've put in place. And then the slow approval turnarounds. No excuse. That's not about cost of capital or anything. That's just bureaucracy. And I think the President yesterday was strong. Cut the bureaucracy. Become activist civil servants in DFIs or whatever. Get those things moving. Service people. Next one. 3, rank the following reforms in order of importance. Again, you've spoken. Simplify applications. I'm hoping the DFIs here are listening to this. Simplify applications. I know Minister says that all the time, but I think we've got to track progress on this. So do we have a benchmark now? I know we did it in SEDFA, Minister, 13 different application processes to go through. Minister says cut that down to 3. And automate it so we can move on these things. Reduce documentation, same. Okay, next, next question. What changed? There's a lot of changes there. You know, cash flow, digitalization, I think that's coming up over and over again. More information sharing. Do you know about all the instruments that are out there? Do you know the application criteria? Do you get support to meet that application criteria, as in pre-investment support that's out there? Next question. How confident are you that DFIs can do what you're asking them to do? Eish, that's not good, Minister. Most of the audience is not confident that the DFIs are actually going to do what they need to do. So DFIs, that's a bit of something that I think we need to internalize. But there's a strong somewhat confident as well. So it's between not confident and somewhat confident. But a much smaller proportion of the audience are very confident that things are going to change. I think it's the last question. Is there a sixth question? What barrier should DFIs commit to? Simplify application complexity. You have spoken, DFIs, hopefully you've listened. I know this is mostly for DFIs, this Mentimeter, but banks as well. I think we could have some questions for you as well, but I'm also hoping you are internalizing what the audience is saying. Thank you very much. Apologies, it was a huge amount to get through. I would have loved to have gone to the audience to hear your views, but otherwise we'll be here till tonight. So we're running a tight ship. So thank you all panelists and audience for listening and being part of this session. Thanks.
Thank you so much. A round of applause. Thank you so much, Andrew, DM, and the panelists. Of course, important discussions. Ministers, I think a lot of what is coming out of the discussions, and again from the audience, is validation, right? I think also it has confirmed some of the concerns that are out there, which is why we are here. So, ladies and gentlemen, we are halfway there. We are at the halfway mark exactly. So we are really trying to drive, to push, to close at a relatively flexible time, which will allow you to continue to network, which would allow you to go to those principles that you've seen in the audience and you want to have more engagements with. We are now going to introduce the third session, which is the second last session for today's proceedings, and it's titled Spatial Equity, something that also has been brought to our attention a lot throughout the course of yesterday and as well this morning. Spatial equity, bridging the gap between metropolitan and rural local economies. Of course, again here, the key focus being local government. So it will be not surprising, I think, for many of you to see the kind of caliber of people in this particular panel. And without further ado, I would like to then call the panelists to the stage, starting with the facilitator, Dr. Thandeka Ellenson from the Moses Kotane Institute, the CEO there. Please, ma'am, can you make your way to the stage as a facilitator and drive this process? And of course, as we've been hearing from entrepreneurs, I'd also like to call Sophia Basson from the Health Revival at the ZF Mgawu district, that is a rural entrepreneur from Northern Cape. Please can I ask our facilitator for session 3, as well as the panelists, to please come to the stage and take their position. To the stage, please. Thank you so much. Can I then also ask the president of SALGA to join this proceeding and this process, this part of the program, Councillor Begestofile. Sir, if you can come up too, please. Thank you so much. And then I'm not sure, I have not seen him, maybe I have, the Statistician General of Stats South Africa, Mr. Risenga Maluleke, to also please come up and take his seat. Perfect, thank you so much. Is the Statistician General here? Yes, right here. Thank you so much. And then I'd like to call Ms. Tsakani Matebula, Planning, Design and Construction Manager at Sanral, to also please join us up on the stage. And then Ms. Lulama Mbombo Vava, Acting CEO at the Eastern Cape Development Corporation, that's the ECDC, to also make her way to the podium, please. Thank you so much. And then I'd like to call Mr. Kanyiso Walaza, Chief Director, Municipal Local Economic Development Support at KZN, that's COCTA. And last but not least, Ms. Betty Molekwa from the Waterberg District Municipality, the LED manager there. And of course, just as a final note, again, just repeating the title and to allow our two panelists to take their seats. This session discusses something also quite crucial: spatial equity, bridging the gap between metropolitan and rural local economies. Please do engage on your digital platforms in terms of just some of the conversations we are asking, so that we can then, through Dr. Thandeka Ellenson, incorporate some of your questions or even your comments that you would like to make. Thank you so much, Dr. Ellenson. Over to you, ma'am.
Good morning, everyone, and I would like to observe our protocol in the interest of time. Thank you so much, Program Director, for assisting us with that. And I would like to greet in particular our panel members, as well as our attendees. So we are bridging the gap between the metropolitan and the rural and local economies. And what we want out of this session is a commitment from the panel members as to what it is that we can do to bridge the gap between the rural and urban areas specifically. So out of this panel, we will request that after the session is done, you give us your commitment in terms of your role, so that we can record and track over the next 24 months. I am not going to give the opening remarks in the interest of time. I'm just going to delve into the questions with the understanding that we are standing between people and their tea time. So there is a Metimeter that is available. We are requesting that you scan the barcode and start answering the questions that are on the Metimeter, so that we can see at the end of the session whether we are moving forward or whether we still have challenges. The questions are in relation to the special factors that are affecting the business or that are hindering the businesses and investments in each and every area. We're also looking for the types of interventions that would make the biggest difference in your area in terms of bridging the divide. We're also looking at implementing or addressing these issues in each and every area or corner of the country, and we would choose interventions that will go through this tracking over the next period of 18 to 24 months. At the end of the day, you just give us your confidence level in terms of the proposed mechanism, confidence level in terms of the commitments that will be outlined by the panelists, right? So let us delve into it. Thank you very much. I will start with Ms. Person, just to throw you on the spot. You are an expert in terms of, economic research and so on. So can you give us, or describe your experience in terms of running the business in your location, and how has this spatial inequity has affected you?
Perfect morning. All protocols observed. I don't take this opportunity lightly. I really appreciate it. From the rural area, I am Sophia Besson from Health Revival Clinic and Trading. in the Northern Cape ZFM district, where I run health practice. We do full body scans, prostate, pap smears, 39 diseases we diagnose. So that means from the urban area to the rural, and we know our areas is very vast. So because of my services, there's a lot of cost effective on the community that I actually assist with. And then also, while I was supported totally by SIDA, SIDA fed me as a baby, they give me milk, and from there on, I actually grow in the next 10 years to SETFA, which assists me highly when I went for the presidential award. But unfortunately, the success so far was just because of that paperwork, to be compliant, but there was no financial support. Unfortunately, SIDA couldn't support me with that. But that didn't let me fall down or decided not to grow. I come out with strategies. So first of all, economic development, give me a little bit amount for equipment. So I used the equipment, I bought it, and then from the money, I actually went to the University of Free State. And then I qualified myself into occupational health as a occupational health nursing practitioner, which is now the field where I'm growing in. Occupational health practitioner is my second revenue, which you know in the Northern Cape of all the solars and then also the mines that is opening there. Am I the black woman in a white dominant area or white dominant facility, which I actually doing now the occupational health services, which all the solars almost there that started in the ZFM, that I also do the medicals for them. So now I have one concern. With not effective funding, the 80,000 rand that I won at the presidential award, my leg was transportation. So I could take that money and get transportation so that I can do the rural area, which is far. Now this year, I'm 10 years as a decade, which I didn't receive any back feedback from all the other funders. SIFA, NEF, they didn't say to me I was declined or anything, it was just a delay, but I have that passion, because this is a passion to change the community. This is the passion for the 30 years that I was working in Department of Health, to make a difference in the rural area, especially health. I am involved in the radio, where I give health education, and I think this is one of the lack in South Africa, is proper health education and proper medical services. So, with this lack of transportation, I could go further. I also are involved with the CITAs, and then also with the TVET colleges, which is actually my staff, because I can't afford to have more staff. The clinic can actually give 30 people at one clinic job creations, which is 5 clinics in only my district. But I move over now to the Western Cape, which this summit was very good, because yesterday I met the mayor of Beaufort West, which I already expand to that area and open in my clinic. So what I normally say, why must I only have 10 employees, which make out every year 6 to 8 from the college for people or students that have to come and do the internship as job experience. So I want to improve and help with job creation. I thank you.
All right, thank you so much. That is amazing, and we are also happy and appreciate that you take matters into your own hands. You don't just wait for government to come and help you, but you also do your part in making sure that you progress towards the success. Let us go to the president, right? President of SALGA. President, can you just, in your view or your perspective, just let us into your world in terms of how the policies are done, how the structural inequality and policies are done. What is it that is being done to close the gap, if any? You just let us into your world, I'm not going to structure questions for you. I just want you to be open in answering this question.
Hello. Yes. Thank you very much. Thank you very much, Doc, and thank you for giving us an opportunity to reflect on the issues that relate to local government and government as a whole. I think my comment will premise itself on the successes of any government or any nation depends to the collaborations. And I will give an example of why I'm talking about linking it to rural difficulties that they are facing today, and what we think it should be a solution out of those difficulties that rural dwellers or rural communities are facing into our South African conditions.